So after Trump's Liberation Day, many people have been liberated from their money. Over the past 2 days, the S&P 500 has dropped by more than 10%. As of making this video, the futures market is down by another 3%. If this holds true, this will mark the worst 3 days drops in the S&P 500 history, matching the likes of 2008 Great Financial Crisis and 2020 pandemic crash. I understand this can certainly be a scary time for many investors. That's why I wanted to make this video to give some clarity as to what you can expect going forward, what I'll be doing, as well as what is the best way to invest. But first, I think it's important to first understand why is Trump doing this. Some people pointed out that he's purposely crashing the market so that his rich friends can benefit from it. Others say that Trump is just incompetent. After all, he had many failed businesses in the past. But personally, I think the answer is a lot more straightforward than you might think. And it's because he believes that trade deficits are bad for the US. And he feels that other countries have taken advantage of the US. That's why he wants to impose these tariffs to fix the issue. Now, whether you agree with his tariff plans or not, one thing we have to give to him is that he has been very consistent all this while. This was what he said almost 40 years ago.
And yet we let Japan come in and dump everything right into our markets and everything. It's not free trade. They come over here, they sell their cars, their VCRs, they knock the hell out of our companies. And hey, I have tremendous respect for the Japanese people. I mean, you can respect somebody that's beating the hell out of you, but they are beating the hell out of this country. Why aren't they paying us 25% of what they're making? It's a joke.
And just before you think this is a Trump thing and he's just crazy, check this out.
How far does China have to go? How much more repression? How big a trade deficit and loss of jobs for the American worker? And how much more dangerous proliferation has to exist before members of this House of Representatives will say, I will not endorse the status quo?
One of the major reasons why the middle class of this country is in decline and why the working class is being decimated and why real wages are going down for millions of American workers who are working longer hours for lower wages is that for a number of years now, we have been hemorrhaging.
2 months ago, we moved to hold China accountable for unfair trade practices that harm American automakers. Today, my administration is launching a new action against China. This one against illegal subsidies that encourage companies to ship auto part manufacturing jobs overseas. These are subsidies that directly harm working men and women on the assembly lines in Ohio and Michigan and across the Midwest. Your Senator Sherrod Brown has fought as hard as anybody to stop this, and we are going to stop it. It is not right, it is against the rules, and we will not let it stand.
Don't they all sound like Trump? Even Obama thinks that this is unfair. But then you might ask, what's so unfair about trade deficits? Didn't the US benefit by having access to cheaper goods while enjoying a strong demand for the US dollar? Yes, that's true, but it also comes at a cost. My friend Bunty explains this very well in his video, which you should check out. But basically, you can see that since 1980, the US trade deficit, this black line here, has been growing larger and larger, and now it is at a $1 trillion deficit. This isn't limited to just good imports. It also means that US is also losing jobs to other countries. For example, it was reported that since 2001, the US has lost a total of 3.8 million jobs due to the trade deficit with China. Here's a chart to better show this. You can see that the absolute number of jobs in the manufacturing industry have declined since the 1970s. And in terms of percentage, it has also declined since the 1940s. Not just that, the US share of global GDP has also declined from almost 40% in 1960 to just 26% now. Basically, what this means is that the rest of the world has grown at a faster rate than the US. Because by right, if this is fair, everyone should be growing at the same pace. But now, China, for example, is growing at a much faster pace than the US. Because of that, many Americans feel that they have been taken advantage of, and this is unfair. But as to whether you agree with how Trump is trying to fix this, that's another matter altogether. Though, I'm a little puzzled as to how Heard and McDonald Islands ended up on this list, given there is an uninhabited island that's only populated by penguins. Oh, never mind, the penguins are protesting now. Quick pause. If you are looking for the cheapest broker to start your investing journey, check out Interactive Brokers. It has the lowest fees for stocks, ETFs, options, and more. Not just that, interactive brokers lets you easily research stocks. Like, you want to check out companies' financials? Here it is. You want to check out analyst ratings? Here's a bunch of them. It even has free technical insights which tells you where the stock might possibly go next. So sign up to interactive brokers today. And let's get back to the video. All jokes aside, where do we go from here? Right now, we have two camps of people. On one hand, we have people who say that this time is different and the worst is yet to come. Therefore, I will only start investing after it drops even more. Then, on the other hand, you still have people who say that I will keep buying while crying no matter what because I believe the markets will eventually recover. So, who is right here? The truth is that I have no idea, as both scenarios are equally likely to play out. But let's go through both scenarios so that you know what might happen. Okay, let's talk about the bad scenario first. In this scenario, China, Canada, Europe, and the rest of the world decides to retaliate against the US. If this happens, the S&P 500 would first drop by another 8% to its first major support level and enter the bear market. This support has held on quite well in 2020 and 2022. However, because Trump is a madman, he decides to escalate this further by slapping on even more tariffs back at everyone, including the poor penguins. In that case, the S&P 500 might fall even further down to the 3,700 range. This seems impossible, but it did happen back in the 2000 and 2008 when there was great fear in the market. If that happens, this means the S&P 500 will be dropping by another 25% from current levels. And if it escalates even further, it could drop all the way down to the last support line. But before you be like, panic here's the best scenario of what could happen. Later this week, Trump wakes up and suddenly says, April Fool, and removes all his tariffs. The market goes back up to all-time highs and everyone lives happily ever after again. Okay, I know that sounds stupid, but this is Trump that we are talking about, and he's unpredictable. Personally, I believe a more likely scenario is somewhere in between. That's because an all-out trade war would benefit no one. If that were to happen, everyone will lose. The US and its trading partners will go into a recession and global trade will plummet. Because of that, I highly doubt any of the leaders would want to go down that path if they can avoid it. In fact, it was reported that more than 50 countries have already reached out to the White House to begin trade negotiations. This includes countries like Taiwan, India, Argentina, and even Singapore. Though, China has already retaliated back, and Europe will likely too. After that, it's anyone's guess where things will go. But the one silver lining is that even if there's a trade war, it wouldn't last very long. Because first, the US will be having a midterm election in 2027, and Ted Cruz warns that if Trump tariffs were to cause a recession, the Republican would be losing a lot of seats by then. And two, Trump's presidency will only last another 4 years till 2028, after which Trump will step down, hopefully and the new president will reverse this. But from now till then, I guess the market will continue to be volatile for a little while. However, here's what history has to say about this. Right now, the VIX is at one of its highest points in years. And this usually only happens when there's great fear in the market. For example, in 2020, 2008, and 1998 dot-com crash. And what history shows us is that whenever that happens, the S&P 500 has usually seen more greens than reds over the short term. For example, 1 week after the VIX reached 45, 83% of the time, the S&P 500 has given positive returns. And after 2 weeks, 75% of the time, the S&P 500 has given positive returns. Here's another stat. After 2 consecutive days of 4.5% drops, the market has again given more green days than red days. This includes the 1929 time period where there was a global trade war. Now, what about an even longer time horizon? Here's where it gets even better. Over a 1-year time horizon, we could still see some reds. Over 2 years, there's even fewer instances of reds. And if we look at a 4-year time horizon and longer, the S&P 500 has always ended up in the green. Now, of course, I'm not saying that this will happen every time. For all we know, maybe this time is different. Maybe this could be one of those times where the market continues to drop all the way to zero and never recover. You never know, right? All I'm trying to say is that over the short term, none of us know where we will go from here, whether it's up or down. But if you can take advantage of this and buy when there's blood on the streets, there's a very good chance you will end up in profits 3 to 5 years down the road. Because of that, my strategy is very simple. I will continue to buy no matter what. One thing that I find very interesting is that when everything is going up, everyone says stuff like time in the market beats timing in the market and be greedy when others are fearful. But when everything is crashing left and right, they'll be like, maybe I should wait a while before buying. Maybe it's still too early to buy back. Things will get a lot worse. Maybe this time they'll be right, maybe they won't. But what history has shown us is that the best days usually happen in bad markets, when the market seems like it's never going to recover. And the danger is that if you just miss the 10 best days out of a 20-year period, your returns will drop by more than half as compared to someone who stays fully invested. And if you miss even more days, your returns will drop even more. So what stocks have I been buying? I've been buying Google, which is already trading below its current intrinsic value, despite me using a rather low 16% earnings per share growth rate, slightly below its 3-year average of 17.5%. The reason I'm not worried is because Google has a strong moat. It has a very healthy cash to debt ratio, and it will ride out this storm. Another one is Amazon, which is trading at a discounted valuation now. Same for S&P Global. Even Nvidia is finally starting to look cheap too. Microsoft is trading at its fair value, and I'll be looking to add more if it goes down even more. And what about Tesla? A while back when I announced that I'm selling Tesla because I was not comfortable with holding it at current valuations, I was being laughed at, that I was selling at the bottom and I have no clue what I'm doing. Well, maybe I still don't. But my belief still holds true. With all the brand damage, tariffs, possible recession, and now escalating trade war, if Tesla were to trade at its fair value today, it could see even lower prices. Not saying it will reach there, because Tesla has never been trading at its fair valuation for a very long time, and I won't be surprised if it continues to trade at a rich valuation. But if it did go down to the sub $100 level, that's when I will start to add Tesla back. So that's my strategy. I'm still buying no matter what, because these prices make sense to me and I have confidence they will recover once this is over. But if you are still hesitating, remember that there will never be a best time to start investing, because if you start investing when the market goes up, you will probably end up buying at an overvalued price. And if you start investing when the market goes down, you will end up seeing your portfolio rates. But just know that investing in a bad market is always better than investing in a good market, because that's where riches are made. Just look back at times when you could be buying stocks at huge discounts when no one wants to buy the stock, like Meta at sub $100 range both in 2020 and 2022, or Netflix at the $200 range back then. Many people would have looked back in regret and asked themselves why they didn't buy the stocks back then. And now, the opportunity to buy is back again. But of course, I'm not telling you to all in everything right now, because no one knows how bad this can get. So just slowly dollar cost average in. You see a dip, you buy a bit. You see another dip, you buy a bit again. At the same time, this is also when you want to make sure you have enough emergency funds, because people typically lose their jobs in a bad market. And if you don't have a job and you don't have your emergency funds, you will not only not have the money to continue investing, but you might even be forced to sell your investments at a huge loss if you ever need the money. So make sure to keep at least 6 to 12 months worth of emergency funds at all times to prepare for the worst scenario. Now, as bad as this crash may seem, just know that this is perfectly normal, because even though the S&P 500 gives about 10% returns on average, if you look at any given year, you would usually see the stock market either go up by a lot or go down by a lot. And it's very rare that it will give something that is in between. For example, this is the portfolio of Peter Lynch, one of the greatest investors. Even his portfolio has seen huge losses along the way, but each time it has recovered. So before I end, let me leave you with a quote from Peter Lynch. The key to making money in stocks is not to get scared out of them. Anyway, that's all for this video. Hope you found it useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.